Hello everyone, good afternoon. My name is Silvan Amberg, I'm working at PwC. I'm responsible for corporate taxation of cryptocurrencies. And tonight we would like to give you an overview of the compliance obligation that a company in Switzerland has, especially with regard to cryptocurrencies. We look at this from a corporate tax perspective and then also from a VAT perspective in the second part. So the idea is to give you first a kind of an overview of the tax system, like what a Swiss company actually has to do in terms of tax compliance, like from a general perspective, but then also look at some specific as it comes to dealing with cryptocurrency. From a timing perspective, we will not be able to go into very details of something like doing an IC or an STO or operating a crypto exchange. It's really more about what does a company has to do when it buys or sells Bitcoin or it pays its employee with cryptocurrencies. Let me start with the corporate tax system. In Switzerland, we have corporate taxes on the federal level and also on the cantonal level. On the cantonal level, by now, the tax laws are pretty harmonized, so the tax rules are very similar from each canton to each other, but the cantons still have a lot of flexibility with regard to the tax rate. As you can see on the map here, there are certain cantons that have lower tax rate than others, but that's actually the main difference between the cantons. And there is as a company, you become tax resident in Switzerland when you incorporate your company in Switzerland. That's kind of what we call the unlimited tax liability. Or you become tax subject if you operate in Switzerland through, for example, a branch or permanent establishment. And then under these circumstances, you become a Swiss taxpayer and then you have to file your tax return. Now, what does it mean? I mean, filing a corporate tax return means you have to file every year, you have to file a tax form, send it to the tax authorities. The deadline that we have in Switzerland is, it depends in every canton, it might be a bit different. In the canton of Zug is the 30th of September. However, this deadline can also be extended. So typically there is not really a rush to hand in the tax return early in the year because you still have time until the 30th of September and then you can still extend the deadline. The canton of Zug is very generous. You can actually extend the deadline until the 31st of March of the year after. When you are a new company, that's also important to understand. When you have incorporated your company during the year, you're actually not required to file a tax return in the first year. If you decide to do what is called an overlong business year, so you do your first financial year end by the end of the next year, so your first business year is, for example, is 18 months, then you only have to file a tax return after you have closed your financial statements for the first time, which is good because then you don't have to file a tax return after 3 or 6 months of your incorporation. Now, how is the taxation, how is it calculated? In Switzerland, we are pretty closely following the accounting treatment of the company. That's why it's very important to understand how things are booked in the accounting, and apart from certain kind of measures that the tax authorities can take to change the taxable profit, it's really more or less what comes out as a profit from your financial statement is also taken into account for tax purposes. So once you have your calculation of your financial statement ready, then you take your taxable profit, and this is the basis to calculate your income tax and your capital tax. That's why I think it's very important to understand how cryptocurrencies are treated from an accounting perspective, because that's then in the end driving how you end up paying your taxes on your cryptocurrencies. Now, there are two general principles that we have in Switzerland for accounting for cryptocurrencies. I don't want to go into the very detail, but the standard way of looking at cryptocurrencies in the accounting is that you book it as a financial or an intangible asset in your balance sheet, and that means you book it at your acquisition costs, and that's the green line that you see here. So you put in the value that when you acquired it, like for example, you bought it, and then you keep it at this cost. So even if the value of the cryptocurrency goes up, that doesn't mean that you have to actually pay capital gains tax on that value increase because you keep it at your cost. The only thing is you have to do under the Swiss accounting principles, if by the year end the value of the cryptocurrency is lower than your acquisition or your accounting level, then you have to book an impairment. So you have to book the loss that you're incurring on a timely basis. and you cannot just keep it at a cost if the market value has dropped below. So then you would have a reduction and then also a loss from a tax perspective. But then at the only time when you actually pay tax on your cryptocurrency would be when you sell it, because then you realize the capital gain, you receive, for example, fiat currency against it, and that's when you actually book the accounting gain, and also you pay the corporate income tax in that specific year. There is also the option, and as an alternative approach, if you keep your cryptocurrencies as as asset for trading, and if the currency has a market value that you can observe on a daily basis, for example, if you trade with Bitcoin or Ether, you can opt from an accounting perspective to keep that at fair market value, and then that's the blue line here, you would constantly change the value as it develops over time, and then constantly realize capital gains or losses as they occur. I think in the market currently we don't see that happening very often. It's a bit more complex, and often companies are keeping that kind of as an investment, or sometimes they even own their own tokens, and they don't want to they don't use that as a trading asset. They really kind of use that as a means of financing themselves. And I would say it's much more common to keep the accounting at costs. So that's actually probably the most important aspect when it comes to paying corporate income tax on cryptocurrencies. Now, let's get a bit more deeper in the different types of tokens that we have. The Swiss federal tax authorities have issued a working paper where they qualify cryptocurrencies and they put them into 3 baskets. It's a bit different than how FINMA is looking at it. They call it a bit different, but it's actually like they distinguish between native currencies, native tokens, which are, for example, cryptocurrencies. Then the typical utility tokens that give you a specific utility that you can use it, but it's not really like a financial asset where you get a financial return. And then the asset-backed, they call it asset-backed token, not asset tokens, that give you more like a financial return, some kind of an interest or a dividend or anything that you would actually see as a financial investment. And the tax authorities specifically mentioned in their paper the equity tokens, participation tokens, and the debt tokens that they qualify. A token that is not defined specifically is what is coming, I think, more interesting nowadays. These are tokenized shares. So that's important to understand. When tax authorities speak about equity tokens, they speak about a token that has similar properties like a share, but it's not actually a formal share. And this is very important to understand because in Switzerland we have what is called a stamp duty, a securities transfer tax that you have to pay when you deal with shares or bonds. And these only apply for debt token like bonds and tokenized shares. So I think this is really from a compliance perspective, the most important thing to consider is, as long as you're dealing with these kind of more traditional utility and native tokens, apart from paying your corporate income tax, and we will look later at the VAT aspects of it, but there is not really a lot of compliance obligations around that. You just have to book them in your financial accounts. But as soon as you start to deal with these kind of more complex tokens, you need to make sure that you're not coming into a situation where you have to pay securities transfer tax. So you need to analyze your token and actually understand under which of those categories falls. Is it a taxable security? Do you have to register as a securities dealer? Even if you don't require a regulatory license to deal with it, you might require a tax registration and you might have a filing obligation from that perspective. I don't think in Switzerland there's a lot of these type of tokens already on the market, but I think it's coming more and more. Security token offering, tokenized shares. So this will become more and more important over time. I mentioned here also withholding tax because when you have a token that has properties of a debt instrument or a share, there might also be a withholding on it. So you need to then understand whether you have to you can claim back that withholding tax either in Switzerland or in a foreign jurisdictions. But as said, I think at the moment this is a bit less of a relevance. I think most of our clients, they are dealing with more of this type of tokens actively. So I think the message is really, as long as you have your accounting right, the tax authorities will generally accept that accounting treatment.